As earnings season gets underway, which parts of the market can still deliver? The AI boom has been hugely profitable, but the patience of investors is wearing thin. As the world's biggest tech companies report earnings this week, markets are demanding answers on whether massive spending will finally translate into real returns. So with expectations stretched and skepticism rising, this earnings season could be a turning point. Altaf Kassim is Europe Head of Investment Strategy for State Street Global Advisors. So Altaf, it's no longer enough just to beat forecasts. Companies are expecting to smash them and deliver punchy guidance. Has the bar been set too high this quarter?
I mean, I think what we've seen over the last year is that earnings, even beats, are not enough, like you said, and it's going to be all about the guidance. And I think this year it's really going to be much more about guidance. We've seen spending, and companies have to really show that that spending is delivering. It's delivering margins, it's delivering productivity, and I think that's exactly what the market is going to be looking for this year as opposed to last year.
How can those tech giants be showing to convince markets that the returns are coming?
There's a few things. One, I think they have to move back into a self-financing mode. The market took a bit of fright when they realized that some of the companies were levering up for their spending plans, and they were much more comfortable when that spending was coming from cash flow. So I think moving back to a more self-finance mode is one thing. But then, like I said, they really have to show that the money they've spent in the last year is delivering results, that it's coming through on margins and it's coming through productivity, and that there's a monetization plan for the next few years for the billions of dollars that has been spent in the last couple of years.
Well, there is growing optimism around Europe with expectations that Stock 600 profits could rise around 10% this year. Is this a bumper quarter for Europe?
There's definitely been a lot more optimism for Europe, and it feels like Europe is healing, growth is improving, inflation is falling and stable. And what I think the events of the last few weeks have shown is that the European defence story in particular is a multi-year story now. It's got legs. And it's not a Germany only story, and it's probably not a defense only story. There could be spillover into other sectors like industrials more broadly. So I do think that with that unfortunate tailwind behind it, it could be something that actually pushes Europe ahead as much as it did last year. And we could see Europe outperforming the US once again this year.
Well, let's turn to the luxury goods sector. They've trimmed much of their gains from the past two quarters, but as return to growth is expected, is the worst now behind the sector?
I think for luxury goods, as ever, the real story is China and whether China can turn on the consumption tap, which is something it's been kind of trying to do, but not really getting very far with over the last few years. It's defaulted back to what it's good at, which is manufacturing and exporting. But in a world of tariffs, they have to look more at internal consumption, and some of that will be buying European luxury goods. And so I think what we're looking for is a bit more evidence from the Chinese authorities that they're willing to enact stimulus, that they're comfortable with their consumers, starting to spend, and that they've got their back. And that's something that's been missing in the last couple of years.
Finally, Altaf, foreign investors, particularly Europeans, have played a major role in driving US stocks higher. But with diversification now a bigger theme, is that flow starting to turn?
We haven't really seen a lot of the flow starting to turn, especially in US equities, where in fact we've seen steady buying from European and all global investors. What we have started to see is a bit of dollar hedging. So concerns about the US have been reflected mostly and firstly in the currency. And that's where we're seeing European investors starting to change their portfolios by putting more dollar hedged assets in place, by thinking about dollar hedging when they buy ETFs and mutual funds, and by lightening up on their actual outright dollar positions as well.
That was Altaf Kassim from State Street Global Advisors. Don't forget, you can watch more videos on Reuters.com.